Hi, welcome to this video today, which is on the 28th of January. It's Sunday, and we're going to be looking at a trade setup in our view, which offers a good risk-reward trading opportunity. It's going to be in GBP USD. I think the pound has run to overbought in the short term, and we'll have a good correction to the downside. So stop is relatively tight in relation to the profit potential from this trade. Now we're going to draw our technical levels in a moment of entry, stop and target. But just for new viewers, what we're also going to do is look at the COT, the Commitment of Traders report. If you don't know what this tool is, it's a fantastic tool to help you get better timing with your trading signals because it measures the sentiment behind the chart. You just can't purely see from the technicals alone. Now, just want to know more about it, you can join our mailing list beneath this video. We'll send you more details. Just going to watch the video through right now. Just keep in mind, what we like to do is look for commercial hedgers, the smart money, to move aggressively against speculators in terms of their positions and trade with the commercials. Right, let's go to the charts. I'm going to start with the COT Commitment of Traders report.
British pound against USD. We're just going to very quickly look at the COT net traders positions first, then go and draw our levels. Now, in terms of the commercials, they're in red, large speculators in green. Just for new viewers, there's two ways that we use this report. I'm just going to describe both ways very quickly and look at the current situation. Now, one of the most effective ways to use it is to look for divergence between the groups, and they heavily oppose each other. Okay, like here. Commercials massive long position, speculators big short position, breaks in favour of the commercials, and up we go. Now the commercials remain bullish until 136. Here they drop short, okay, just as speculators reverse their views. So you can always look for crossovers to give you clues of where price might go, and yeah, we break down from 136. Okay, we come down to 131, commercials briefly go long again, and then as we come up here to 136 and then through 136, they're basically moving their hedges aggressively and quickly. The speculators are going long against them. Now, commercials don't lose any money, okay? They own the cash, so they're just basically hedged, okay? So prices can overrun against the commercials in the short term. But what we know now is since this break of 136, the commercials have built up their biggest short position in years. I think it's about 5 years. Speculators are certainly at their most bullish of the pound since early 2014. Now, what we can gather from this chart, obviously we have to time everything technically, is the commercials saw 136 as kind of fair value when they dropped short here. It's the same here. So if you look at this, it's a big price spike. Big price spikes tend to get retraced. So I think we could be due a correction. And incidentally, when you're using the COT, you know, obviously you're timing things technically, and you know that it could go against the commercials in the short term. We did try one short trade after the breakout above 136 and immediately got taken on stop. That very often happens with the COT, but you can trade with, you know, very reasonable stops in size against your profit potential. So now we're looking to get that loss back and hopefully get some profit. So let's move to the chart, daily chart, and draw some levels of entry, stop and target. Okay, we're on the chart of GBP USD, and I've just drawn a line here of breakout, a British pound, nice big blue candle through the 136 level, and we power on up and get to above 143, so well over a 700 pip rally. Okay, we've come back off the high, but you know, it's a big move to the upside. Now, I personally think we are now going to be turning down because this is just a spike on sentiment, nothing more. And in relation to this, we can see obviously the commercials are going heavily short, speculators, biggest long position since July 2014. But it's not based upon the fundamentals. And yeah, big price spikes tend to retrace or completely fade back. And I think this one is going to retrace. Now, let's look at the British pound fundamentals since we've had the breakout. We've had consumer borrowing and spending data, both showing that the British consumer is borrowing less, spending less, and debt levels are elevated. They're running out of spending power. That means that going forward, consumption is going to drop, and the UK economy will slow up. It's the consumer late last year, for example, that powered growth. They just don't have the money anymore, and they're not going to get it quickly either, because wage inflation remains below core inflation, so their spending power is being further diminished. Now, if we look at inflation data generally, recently came in below forecast, and we know that a firm currency dampens inflationary pressure. The Bank of England are going to be able to do exactly what they want, which is keep rates on hold for the foreseeable future. There's going to be no Bank of England rate rise in the next few months. All recent data points to a slow up in the UK. The only decent bit of data really was GDP. It was good. It came out on Friday, but it's lagging. It refers to Q4, so back, obviously October to December. So it's not relevant now at all, okay? The British pound is really up on dollar weakness, not pound strength. In terms of the dollar, it's just been sold off on a number of major currencies. It's at a bearish extreme, technically on many currencies, and it will have a correction of sorts in our view. And I think the British pound is vulnerable because this big move up is not supported by the fundamentals. And also in terms of price spikes regular viewers know, we like the 20-day moving average. And prices will normally stay pretty close to the 20 and come back to it. When you get an acceleration away from the 20-day moving average, a price spike, sentiment driven, it'll normally come back to at least the 20-day moving average. Now, in terms of this trade, let's have a look at the price action. Just the last three candles specifically. We know we pushed up quite strongly. This is the biggest blue candle of the move up, and volatility's increased, and we've come outside of an outer Bollinger Band, which is the orange line. We know statistically that the more or the higher the volatility, the less likely price is going to stay outside of the band for long. So here we close outside of the band. This candle here is significant. Try and push to a new high. Sorry, we do push to a new high in clear blue sky. We're the buyers. There are no more buyers up here. And we finish red, back within the outer Bollinger Band. Then on Friday, we spike again outside of the outer Bollinger Band. We can't take out this spike here. And we settle back. Although we settle blue, we're well off the highs. Now, from our perspective, on a close basis, I don't see that double top being taken out, which also lines up with the outer Bollinger Band. Don't rule out a spike above the level, but I just don't think it'll be sustained. Now, where would you want to come into this trade if you're coming in fresh? Well, I would simply go through, so I'm just drawing a quick trajectory line. I just basically wait for a move below Friday's low. And then where could we go to? Well, we should come back at least to 20-day. That will snake up. 138, you could say, is minor support, body, tail, okay? But these sorts of spikes very often retrace the whole way. So I'm looking for 136. We'll obviously have to see how we go. But in terms of where would you place your stop, well, this candle tail is right on the round number at 143. I think it was 142.97. So well back from the round number. You could be safe well, when I say safe, give it a bit of room. You could be behind this tail, or you could just be behind this tail, say 142.35. What's that going to give you in terms of risk reward? Around 3 to 1 if we get to target. I mean, you have to see how it goes. Obviously, 138, I think, is the first minor support level, then I think, yeah, we should retrace all the way back to 136. We can see, yeah, prices have faded back. Momentum flat at overbought, turned down, flat at overbought on the RSI. Just think that buying is exhausted. We shall see next week. Obviously, if you want to follow our daily analysis of this pair and 10 other major pairs, you can. I remember sending you life access beneath this video. But as of now, that is my view. We shall see how we go. Thank you for watching this video today. Take care and have a good day.